In the kingdom of cats, there's a big argument at the top. On one side, Mr. Purrmp, the loud orange cat who loves booming markets and lower interest rates. On the other, Chaircat Pawswell, the calm gray cat who guards the value of the kingdom's fish, the money everyone uses. And lately, they've been hissing at each other. Purrmp says, cut rates, more fish for everyone. Pawswell says, not so fast, too many fish and prices go wild. So what's this catfight really about? Why do interest rates matter so much that even the most powerful cats can't agree? And what happens to your fish when they start playing this dangerous game?
Chaircat Pawswell isn't just any cat. He runs the Federal Reserve, the place that controls how much fish flows through the entire kingdom. It's not a regular bank. It's the bank for banks, the one that controls how many fish swim through the economy. When too many fish flood the system, prices go wild. When there are too few, businesses starve and cats lose jobs. So the Fed's job is to keep the flow of fish just right. Not too splashy, not too dry. And here's what makes it tricky. The Federal Reserve doesn't take orders from the president, not even from Mr. Purrmp himself. That independence keeps the fish economy stable. But it also sparks a lot of fur-flying arguments between the throne and the Fed. Long ago, before Pawswell's time, the kingdom's banks were a total mess. One sneezed and 10 more collapsed. Cats would rush to pull out their fish, but when they got there, the fish were gone. Then came the Great Panic of 1907, the biggest splash of all. Banks failed, fish vanished, and chaos spread across the land. So the kingdom's leaders got together and said, we need something to stop this madness, a safety net for our fish. And that's how the Federal Reserve was born. A system to keep banks steady, calm the panic, and make sure that when the fish hit the fan, there's someone to clean up the tank. The Fed's main purpose isn't power, it's stability. The Fed might sound like just another office full of sleepy cats pushing papers, but every move it makes sends ripples through the entire economy, and far beyond it. When the Fed changes interest rates, everything shifts. Loans get cheaper or pricier. Businesses hire more cats or start cutting back. Prices at the market rise or fall. Even your savings, their value changes overnight. And it doesn't stop at the kingdom's borders, because the fish, the dollar, is the world's favorite trading currency. When the Fed raises rates, fish swim back to the US. Investors chase higher returns. When it cuts rates, fish swim out across the world, searching for better deals elsewhere. One small move in Washington can shake the world's entire ocean of money. So how does the Fed actually control the fish flow? It's not like Pawswell swims around handing out fish personally. He uses 4 main tools, plus a couple of superpowers. The first and most famous tool, interest rates. It's basically the price of borrowing fish. When the Fed lowers rates, borrowing gets cheaper. Cats take more loans, businesses grow, spending rises. When the Fed raises rates, borrowing slows down, inflation cools off, but jobs can take a hit. Interest rates are like the Fed's volume knob. Turn it up for growth, down to calm the chaos. That's why when Mr. Purrmp yells, cut rates, he's really asking for louder music in the economy. The second tool sounds fancy, open market operations. Every day, the Fed buys or sells government bonds, basically IOUs from the kingdom. When the Fed buys bonds, it gives out fish in return. More fish enter the system, banks have more to lend, spending goes up. When it sells bonds, it takes fish out. Lending slows, prices cool. It's like adjusting the current in the river, not too fast, not too still, just enough to keep the economy swimming smoothly. Every bank must keep a certain amount of fish in reserve, just in case. If the Fed lowers that number, banks can lend out more fish. That means more loans, faster growth, but also more risk. If it raises the requirement, banks must hold more fish back. That slows lending and prevents dangerous bubbles. Reserve rules are like a safety net. They keep the system steady when panic hits. When banks keep extra fish parked at the Fed actually pays them a bit of interest. If that interest is high, banks say, why risk lending when we can earn easy fish by doing nothing? So lending slows and the economy cools. If that interest is low, banks rush to lend, and the whole system speeds up again. By tweaking this reward, the Fed steers how fast money moves through the economy. Sometimes small tools aren't enough. That's when Pawswell pulls out his first superpower, quantitative easing, or QE. Think of it as flooding the system with extra fish to get everyone moving again. The Fed buys government bonds with newly created digital fish. Banks get more fish, they lend more, cats borrow, spend, and the economy starts purring again. Now, QE sounds a bit like open market operations, but it's much bigger and longer lasting. OMO is a daily tune-up. QE is an emergency boost when the engine's about to stall. But too much quantitative easing and boom, inflation. Too many fish chasing too few toys. So when things swing too far, the Fed reverses it. Quantitative tightening, or QT. Selling bonds, pulling fish back out of the system. QE fills the bowl, QT drains it. Too much of either, and the kingdom starts coughing up hairballs. And here's the sneakiest trick of all. Pawswell doesn't even have to do anything. He just has to talk. That's called forward guidance. When the Fed hints it might raise rates soon, investors panic. Fish prices, stocks, even tuna futures twitch instantly. If Pawswell whispers that maybe cuts are coming, boom, markets leap with excitement. Sometimes, just talking about future moves sends waves through the global economy. That's how powerful words can be when you control the world's main currency, the US dollar. Now that we know how the Fed works, it's time for the big showdown. On one side, Mr. Purrmp, the loud orange cat who loves booming markets and happy voters. He wants easy fish, low rates, cheap loans, more spending. Because when cats feel rich, they purr, and that looks great politically. On the other side, Chaircat Pawswell, calm and steady. He worries that too many fish in circulation will drive up prices, and one day, cats won't afford even a single sardine. Purrmp says, make it rain fish. Pawswell says, if it rains too much, we'll flood the kingdom. It's the eternal struggle, short-term gain versus long-term stability. Politicians love quick wins. Central bankers think about the morning after. And that's why, every few years, the same catfight starts again, just with different fur colors and new names. So why should an ordinary cat like you care about what happens inside the Fed? Because every decision there ripples through your daily life. When the Fed raises rates, loans get pricier. Your car payment climbs, your dream home drifts further away. When it cuts rates, borrowing gets easier, but prices at the grocery store start creeping up. If the Fed tightens too much, jobs disappear. If it loosens too much, your savings lose value. Everything, from your paycheck to your shopping list, feels the echo of those quiet meetings in Washington. Even if you've never heard of Mr. Pawswell, his paw prints are all over your wallet. In the end, the Federal Reserve isn't a hero or a villain. It's more like the kingdom's careful referee, trying to keep everything balanced. Every move it makes is a tug of war between politics and policy, between what looks good today and what keeps things stable tomorrow. Mr. Purrmp wants more fish raining from the sky. Mr. Pawswell worries about flooding the land. And somewhere in between, the rest of us just try to swim. So next time markets jump because Mr. Pawswell says good afternoon, remember, in the kingdom of cats, even a few words can shake the whole fish market. No actual fish, cats, or interest rates were harmed in the making of this video. All characters are fictional. Any resemblance to real-world felines named Powell or Trump is purely economically coincidental. This video is for learning and laughs, not for financial advice. Always consult your local fish advisor before investing in tuna futures.